Hello, everybody. This is Kimchi Crypto. Today, I'm going to talk about the crypto price prediction, especially in Q3 this year. Let's dig in. US holds quarterly debt sale steady. Details buybacks starts. New debt buyback program will be the first since 2002. US Treasury Department is selling short-term bonds because people love to buy short-term bonds, but people are afraid of buying long-term US Treasury bills because of some liquidity issues, and banking crisis was caused by those long-term US bonds. That was why US Treasury decided to buy back long-term bonds like 10-year treasury bills. In short, liquidity may come is very likely to come into the market in Q3 this year. And let me introduce the MiCA regulation. This represents Markets in Crypto Assets Regulation is a draft legislation that aims to create an all-encompassing legal framework for the regulation of crypto assets in the EU, in the European Union. And my question here is, when will MiCA regulation take effect? It entered into force on June 29th last year, and it will become applicable in part provisions regarding asset referenced tokens and e-money tokens from June 30th this year, and in other parts from December 30th of this year. So gradually, MiCA regulation takes in effect in the European Union, and in Q3 this year, MiCA will be applicable in parts, which means crypto regulation in EU becomes more clearer. And this means crypto becomes the asset class in the European Union as well. And US Federal Reserve is likely to start interest rate cuts in September this year. Nobody can be sure of this, when will the Fed lower its interest rate. But for now, as of now, it is very likely for Fed to cut rates on September 18th. If this happens, the US stock market as well as crypto market will pump before this FOMC meeting on September 18th, because all of those expectations of the price movement is usually reflected before the actual event. So that was why I bet the markets to pump in July or August of this year. What should we be careful about here then? This is the Fed rate hikes and sell the S&P 500. The blue line here is the Fed fund rates. When Fed lowered interest rates, the dot-com crisis took place in the early 2000s. And when the Fed lowered interest rate to zero in 2008, global financial crisis took place, meaning the US stock market just fell significantly. In the early 2020, when the Fed lowered its interest rate to zero again, the COVID crisis happened. And the majority of the decline in these bear markets occurred after the Fed's pivot. Fed pivot means they lowered the interest rate. Whenever Fed pivoted, whenever Fed lowered interest rate, US stock market fell significantly. When Fed cut interest rate in September, we'd better watch out. If the crypto market pumps in June or July, my plan is to sell some of my crypto assets just in case the market collapses. For the last 60 plus years, Fed's rate cut caused the US stock market to plunge. So when the market pumps in Q3, we'd better some of our altcoins if those altcoin price rises significantly. And when the market dumps in Q4 this year, would it better buy some of those altcoins once again? But my basic plan here is, however, to buy the dip throughout this year and sell the rally in 2025. What's your plan? Thank you for listening.